Yeah, I'm Ben Pullinger. I'm the Senior Vice President of Exploration and Business Development for ATEX Resources, which is a Chilean-focused exploration company, having put out some pretty exciting news over the last little while here, in which we've defined probably something that sits just outside of the top 10 biggest undeveloped copper projects on the planet, with a resource of 1.4 billion tons, at a good grade, and we're about to start drilling it on it, and again in the next couple of weeks here. So. Over to you.
Ben, thank you for the introduction. Good to see you again. You don't look as if you're in your front living room or in your home office. Where are you at the moment?
I'm actually down in Santiago at the moment. Raymond, our CEO, and I are down here. He's actually presented on a panel, and it's a very interesting time to be down here because the opening addresses at the conference that we're at were made by the government and by representatives of the current government, and it was some interesting perspective for us on kind of the lay of the land as it goes forward.
Any insights? Anything we should take away from what the government is talking about the mining sector?
Sure. I mean, really, at a high level, I think there's no surprises here. It was nice that the government acknowledged that the world needs Chilean resources. Their focus really is on how to develop and advance those resources in a way that's respectful to communities and benefits or has the smallest impact to the environment, and also facilitates building long-term capacity. I think those were kind of like the takeaways that I took from that address. And the other thing is not just and to diversify the mining economy as well.
So when you say diversify the mining economy, obviously Chile's copper is the mainstay in Chile.
It really is, yeah.
Yeah. So are they looking kind of stuff beyond that?
Yeah, I think there's a bit of a lithium flavor to this at this point in time. But really, the acknowledgement is that copper is the biggest game in town, and that the world needs Chilean copper.
Amen to that. I certainly see and understand that. So you have recently put out a new resource, 1.4 billion tons, 0.5% copper, 0.2% gold, 0.2 grams per ton gold. With a little bit of silver and a little bit of moly, kind of in the mix as well. It's quite a kind of a strange thing, because you've put out the resource, you've got a high grade core, and you're doing two things. One is, it seems to me that you're wanting to advance the understanding of that, but also the flavor I get from your presentations and your news release is actually you're not done. You're still expanding the resource, and actually what you're really looking at is another phase of drilling, which is what you've got going up now, kind of phase 4 drill program.
Correct. Yeah, we've actually just come through a lot of the planning sessions and the final dotting the T's and I's on the program. And I have to say, I'm quite excited about this program. You're exactly right, Merlin. We haven't hit the edges of the system yet, and we think that there's more to give. And I think that the drill program that you'll see roll out here over the next few months is really a continuation on what we've done in the last few drill programs, which is continue to focus on delineating that high grade core, especially now that we've discovered the western trend as well. You referred to high grade core in the resource, which is the 200 million tons. That's really all in the central trend. We're planning to put some more holes into the western trend, which we think could be a similar scale and size and grade as the central trend. But also we've expanded the system out to the west, out to the north. It's open to the south, open to the east. We really still haven't hit the limits. So the game plan continues to be grow the inventory, grow the size, grow the scale of the bigger mineralized corridor, but really start to now define those high grade trends over the next 2 drill programs, which will take us from 2024 to kind of beginning of 2023 to the beginning of 2025. Tighten up the drill spacing in there. Hopefully we can get some of that material into a higher resource category by the next time we put a resource out, and then use that to underpin the first economic study on this project in a few years.
Okay, so a combination of infill to maybe give greater certainty around some of the intercepts you've got already, and
exactly.
Then continue to kind of look for the edge of the mineralized envelope.
Remember, if we're conceptually looking to advance this with the idea that it will be mined from underground in a bulk mineable situation, right? So really, it's that confidence that we want in the high grade core, and potentially the core of the western trend as well, that are really going to be the economic engines to the system over time. So where the confidence in this case needs to be at the bottom of the deposit, not at the top of the edges of the deposit, and that way, that's the material that's going to be, that de-risks the project and ultimately provides payback. And then everything else on the back end of that is really just a run of mine material, which, if you look at it at the cutoffs that we selected, our break-even cutoff, assuming mining, milling, G&A, cost of sales, worked out to about 0.28% copper. So we rounded that up to 0.3. We constrained the resource at 0.3, but then we reported at 0.4. And one of the reasons we liked to report at 0.4 because it was more than double your break-even cost. You're at 0.4. You're looking at mineralization. You're looking at material within that resource. At 0.4, that's double your break-even. And we think that's a good economic kind of like criteria to use. And then when we look at the average grade of the high-grade core, the 200 million tons sitting in situ just over 0.9% copper equivalent recovered. I think high 0.8s. That's that's the material that you'll mine up front, and that's on a recovered basis. You're looking at the high 50s, into the $60 per ton rock, so more than 3 times your break even. And that's kind of the way we're thinking about this resource.
When I look at the cross sections on your presentation, it kind of seems to me that that high grade core sits at depth, which is why you're looking at going for it underground. Presumably, I eyeballed it in around 500, 600 meters to kind of the top of the high grade. Is that about right?
Nailed it. So it's a little deeper than that, but this is one of the key things about this. It's not just necessarily that the resource lends itself so well to be in an underground exploitable situation. It's that the geography works out really well. So you've got these 2 ridges. We drill obviously from the top of the ridge, which is 700 meters above the top of mineralization. The top of mineralization versus the valley floors is only 200 meters. So you can come in from either the western valley or the eastern valley, be 200 meters above mineralization, and within a kilometer of what just over a kilometer of what we've defined so far. So you have a situation where you can have dual access from one valley or from other valleys, and be in a situation very similar to the scale of other block caving operations that are being developed in the world today.
Yeah, I think in one of your presentations there was a map with an outline talking about an ohm anomaly, so kind of a resistivity anomaly. So is resistivity giving you the geophysical steer to where where to target your drilling? Is that your lead vector on the geophysics?
Yeah, I mean, so like as you know, with geophysics, there's a bunch of different ways to look at it. So in terms of the reason that we use that ohm, the 200 ohm meter surface, is because that actually marks like the transition between the porphyry interface. So you have a super low resistivity anomaly and the increase in the resistivity below that as you move into the porphyry interface. So that gives us kind of like the kind of like the plan projection of how big the system is, and that so the whole system that we have, what we've defined today, there's room to like more than double what we have within that 200 ohm meter resistivity anomaly. So that's why we use that from kind of like looking down at the project, and then within that we use features like the mag works features within the mag work really well for figuring out where we think the porphyries are. Resistivity obviously works in more detail as you get down into the porphyries, as your resistivity increases, and we kind of play with all of those like multivariate kind of analyses as we add the geology now. In geology, we add the geology onto the geophysics, and we now start to be able to put a much bigger picture, a much more robust picture together, which is part of this resource was redoing the geological model and now having something that we can test with much more certainty in the next program.
And is it fair to say that your number one prize, your kind of what you're really hunting, is the early porphyry? I'd love to know when early means. What does early mean in terms of millions of years?
So it's all around 10 million years. It's all relative timing, right? So like the early porphyry is obviously like the first phase of that emplacement, and then it gets enriched and cross-cut by 3 or 4 other phases of porphyry that cut through it, and it sits down lowest. It's also by composition. It's just it seems to they have been birthed with the highest, in place with the highest grade, and then parts of it get enriched as these other porphyries cross-cut it. But what's really interesting as well is it's not just the porphyry. So obviously, in terms of finding continue to hunt high grade, which is what we're doing, the highest grade on a constrained basis. And this is actually one of the things we really like about this system. Is it's very continuous within that, with that early porphyry along strike, along width. Now it's very continuous. It's not very broken up, and now we have potentially 3 of these trends. But once you get past the situation where you've got enough high grade or higher grade, and hopefully we find more in the western trend to justify that initial capital payback, you've got mineralization that bleeds into the wall rock because again the host rock here is a rhyolite, so high silica, high porosity, low iron. So you get equigranular chalcopyrite that basically bleeds out in every direction up to 700 meters away. So and this is one of the features, if you look at the sensitivity table on the resource, as soon as you get into 0.3% copper equivalent mineralized, not 0.3 copper equivalent, 0.3 copper, your tons just escalate because the system is incredibly continuous. There's no internal waste. Once you're within that 0.3 copper, you're within it the whole way. You don't come out of it. So it's an incredibly robust and continuous system, which is evidenced by the 2 kilometer drill holes, of which 12 to 1300 meters are mineralized and consistently mineralized above 0.3 and 0.4. Yeah,
1.4 billion tons is a lot of rock. I mean,
yeah.
It's a lot of mineralized material. I mean, people bandy around these numbers, but that's a lot of rock. So you're going to be drilling these deep holes. Let's call them. I mean, some of the holes I can see you're doing are between 1,000 and 1,300, 1,400 meter holes. You've got you talk about 20 to 25,000 meters of drilling. So that to me looks like somewhere between 15 and 18 holes. I mean, just as a kind of a thumb suck.
Yep.
So these are you haven't got many bullets. You got to put them in the right place.
So I mean, one of the things we really have that working to our advantage was the adoption of A, finding the right contractor, and B, the adoption of directional drilling on this program. Because to your point, actually, if we're drilling some of these holes from surface, our deepest hole now is 2,250 meters, where we stop. But those holes now are infrastructure for us. So we can now come off any of those holes, and we proved it in hole 11, where we put hole 11A and 11B. They came out of a hole that was drilled by Hochschild in 2013. So, these holes are all open. The ground conditions are really good. And we can actually use all of these holes as infrastructure to save ourselves, 900 to 1,000 meters on every hole, depending on what we want to hit. But also we can turn those drill holes in every direction. So the more we actually drill, the more efficient we get. A really good example of that was the last program we ended up drilling, I think 12,500 odd meters. But the effectiveness of that, and the effective meters, if you added in the distance to surface, would be closer to 16,000. So that's a few months of drilling, a few months of fuel. That's a few months of camp. So those are not small cost benefits that you're looking at. That, and especially in a constrained season where you're fighting the elements on the startup and on the end, being able to take months off your program is an incredibly accretive to your project.
What is the operating season then? What's the altitude?
So we're operating. So our camp sits around 3,800 meters, and the drills are at 4,200 meters. So drills are on the way up there right now, and within the next 2 weeks we'll be rocking and rolling with 3 drill rigs, and then that should go through all the way to June.
Okay, so it's kind of 8-9 months.
Correct. Yeah, it's not a short season, but it's actually, it worked out pretty well for us this year because it allowed us to get all our drill results out. We updated our resource. We've got met work that's coming out, which we can chat a little bit on because I'm pretty excited about that too. And then we're back to drilling again. So it's a nice little tidy cycle.
Before we get into the network, let's just touch on the finance and the share price, because it's lovely talking about all the good stuff and the exciting kind of growth of tons, but it's a pretty brutal world out there.
Yeah, I mean, it's really hard to say anything good about it or to really pass any positive comment on it. It is what it is. I mean, unfortunately, we announced our resource. Immediately we saw our share price start moving in the right direction. I think at one point we're up between 20 and 30%, up to 95 cents on the day. And then we just got faced with a wall of liquidity, right? And unfortunately, that was just a macro decision made by a large fund who cycled out of a bunch of names on the same day, and it hurt us. And now we have to rebuild from where we are, but with a much stronger company, with much more resilient resource. A new technical report that underpins that'll be being filed within the next few weeks here, and all the things that we said we were going to do, we've done. It's just tough that we're not getting value, but you keep on plodding on, you keep on doing the right things. You can't time the market, but you can you can't execute on what you say you're going to do, and that's what we hope to be able to keep doing.
Talking about timing, I see that you put out you entered into a credit facility with some of your existing shareholders on a 2-year loan in July and then the results came out in September, and I know it's been awful timing, or awful resource markets, but since July the share price has come off from pretty much 117 to 63 cents. It's been could you just tell me a little bit about the motivation, the philosophy behind that credit facility? Because it just seems a bit strange from where I'm sitting.
Yeah, I mean, I think it addressed a few problems that we had at the time. One of them is that there were people out there that were front running or assuming that we needed to raise equity, and that was creating downward pressure on the stock. We knew we had to get this updated technical report out. We knew we had draw holes that needed to come out. We still hadn't put out the last draw holes at the end of the program. So what this was really designed as was a really friendly piece of paper. And when you look at the terms, like a 6% interest rate, 2-year term, no penalties on early payback. It really is about as friendly as you can get, and it was always meant to be a stopgap, right? The intent at the end of the day was we get the value that we think we can. I hate to compare yourselves to others or ever say that you're cheap. But this is one of those occasions, if you look at the peer group and you apply, baseline metrics per copper equivalent pound in the ground to where we are today, we have an implied value based on peers that's significantly higher than where we are today, and that's the job that we need to go and get that. But the whole point of that facility was to be that stopgap. Once we get to $1.30, there's warrants attached to that would actually pay for that if those are exercised. Actually pay for that facility. So it's kind of the mechanics of it in an upward value creating world work really nicely. The nice thing is we still got another about a year and a half on that facility, and the job really is for us to get out there, get these drills going again, get results coming out, and get that share price moving in the right direction. I think a lot of the pressure, the downward pressure, is now out of it, and we really just need to build that momentum again.
You've touched on a lot of the exploration upside, in terms of expanding. You're also, your business hat is exploration and corporate development, and you must be having those internal discussions about how do you skin this particular cat, because there are ways you can advance it on pure equity. You've done a little credit facility. Presumably, those supportive shareholders would come in for the capital raise to help pay back the loan. So, in a sense, that's let's call that a hybrid equity instrument. Can you give me a sense of the flavor of discussions? I'm not going to put you on the spot for a definitive answer, but you must be debating internally strategic partners. Block caves are big capital items. These are big things. How does that conversation go between you and Raymond when you're around the bar in Santiago?
Look, I mean, I think this conversation actually goes all the way through to our shareholders. It's like, you have to take a look when you're on a whale. You have to take a look at what you can and can't do, right? And fundamentally, we have access to capital. We've got great shareholders. We can explore very efficiently, and we've done a really good job at, I think, advancing this project in a timely manner that I think has surprised some people as to how quickly we've been able to do this. And that's really a combination of the right people in the right places, and also getting the right contractors and the right partners, right? And that really set us up on a path where we can move things forward. At the end of the day, when, as you mentioned, projects like this, they become exercises in moving equipment, moving people, building infrastructure. And those are not things that we intrinsically have and can do. So these are things that we'd look to have partners come along and join us on that ride. Especially when you look to our neighbor to the north, the El Cerro project. It's a Antofagasta and Barrick joint venture. They're drilling. I think they actually just got our drill contractor in there as well. So we're growing the area. But when you look at them on a consolidated basis, this becomes a 6 to 10 billion ton camp between these two projects, and with a lot more. I don't think either of us has fully defined our system yet either. And so if you look at the spine of the Andes in terms of all the big camps, got Vicuña filling the northern part of that gap that sat between El Teniente and Chuqui, and now you've got this Valeriano and El Cerro cluster coming together as well. There's not a lot of places in the world that you can put that much copper together in still, I'd say, the best copper mining jurisdiction on the planet. And the long and the short answer is that we will need partners. We would love to have the right partners who can consolidate that district and do all the infrastructure, people, earth moving stuff that we can't.
So if I read that back, if I kind of assimilate the kind of quite a lot of information, essentially you're saying that it's a big boys playground, and you're going to need a partner at some stage, but you like your chances on the exploration in the near term.
Correct. I mean, I think there's never a right or wrong time to have the right have conversations with the right partner. And it's just about making sure that the entry, everyone gets value on that entry, and everyone can see what the longer term game is. So I think now having this resource out, which we're quite happy with, and we think is a very robust and in some ways even conservative representation, of what we think we have there. I think it allows people to have a better look at us and see whether or not they want to jump on board and partner with us in this.
In a sense, I can see the kind of the long-term value with these holes that you're drilling and the start of the drilling campaign. And what are going to be the near-term catalysts that people fresh to the story can say, oh, look, they've done what they said they were going to do. This is what's the kind of the short to medium-term news flow that you'll be looking to put out?
Yeah, I mean, so again, just going back to that theme of a little bit of conservatism, we're wrapping up the metallurgical test work, and it was quite a good program. We sent out three composites to a lab in Kamloops, run by some really good guys. The results of the kind of the prelim high level results that came out of that work were actually what we used in the recoveries in the resource. And the kind of like the finessing and the finalizing of the work, I actually think we'll be able to show some improvement to that. Again, the underlying system is just very clean, and the goal here is to show that this system can produce a premium concentrate with no deleterious elements that can go anywhere. So I think that news is that's a nice de-risking piece of news that should be out in the next few weeks. Then obviously filing the technical reports so everyone can see kind of how this all came together. And then, along with that, we will be announcing that we've started drilling, and we've got 3 drill rigs turning. The other thing about that, Merlin, is, and this is where we left the project at the beginning of this year, or in May this year, is hole 24, which was the last hole that we pulled out of. It's already sitting at 312 meters at 1% copper equivalent, with about 400 meters to go in that hole. So that'll be the first hole we look to try and finish, push that extra 400 meters and see how far we can keep it going. Because that has the potential to be the biggest high grade kind of like in around 1% mineralized intersection we have on the project. And then the other holes that we're planning on drilling, they're going to use existing infrastructure. So we're trying to generate good news flow early on in the program without having to wait kind of for having to start a hole from surface, and then kind of phase how we move out from continue to drill those high grade trends like the western trend and the central trend, and then push out the edges of the system, but in kind of a synchronized way, so that we're always balancing risk and reward, without having too much risk on these, as you said, on these very long drill holes in the beginning of this program.
I did note hole 24 as something to ask about, because I wasn't sure where it. Just remind me where, because you drilled that down to what depth, and then you stopped because of the end of the season, and where's it going into? Yeah,
so I mean, one of the things that we did in hole 24, which is one of the struggles that we had in the last program, was just access to pads that helped us get across the porphyries, right? A lot of the holes that we've drilled, even with the oriented, the directional drilling, have been really kind of like near vertical, whereas what we were able to do with 24 is we're able to push it down, I think at 70 degrees, and then flatten it out to almost 60 degrees. So it's getting a much better slice. It's getting a very good kind of profile across the central trend. It entered the central trend 70 meters ahead, up hole of where we were expecting it to be. And it now, like at the bottom of the hole, it's sitting between holes 17 and 14. And as I said, with about 400 meters left planned on the hole. And when you look at the sections, we don't actually really know at that depth where that eastern contact is either. So there could be some very positive surprises there as well. But it's a very strong hole. It looks spectacular. and I can't wait to see the next few runs of core coming out the ground and getting that hole finished.
So just by way of summary, it's drilling from the west across
from
the central
to
the east, and it's giving you lateral coverage of the central porphyry.
Exactly. And in a better profile than we've had before, and this is something I think you'll see more of in this drill program is try to get across these porphyries and get better profiles.
Good, Ben. Thank you very much for the update.
My pleasure.
I would love to see the let's talk about the met test work and the and kind of how the drilling is going on as you go through these big porphyries are so interesting. I note that kind of 10 million years old is kind of right in the middle of the Miocene, which is kind of the productive, the fertile.
It's where you want to be, yeah.
Yeah, it's where you want to be. So that's good stuff. Enjoy your time in Santiago, and thanks again.
Thank you guys, as always, for having us. It's always a pleasure, and look forward to our next chat.